Today, we are live trading Jerome Powell's press conference, and I'll talk about a brand new exit point that we are adding into Plan ETF, which is going to be a tremendous, huge win for us thanks to this plan. So let's not delay any longer. Let's add in Jerome Powell. He's already speaking. So in the chat, let me know. By the way, there's Scott Raff. Scott Raff, who is helping us out, our quant, decided to pop his head up and let us know some great news. Happy to see you, Scott. We're gonna restart this so we don't miss anything over here on Bingo. So hashtag outlier in the chat, and we're going to back this up just a smidge.
Available indice after holding open for the ruling focused on achieving our.
Oh, I already see a couple. We're gonna have a blackout today.
Dual mandate. My colleagues and I remain squarely focused on achieving our dual mandate goals.
Oh, hang on. Okay. The subtitles are not up to date.
Good afternoon.
And there's the first one. I knew that was coming. Joe, I actually got to see Jerome Powell in person. He came to Dallas once. I think it was November last year. He's a little bit shorter than I expected. Have you ever seen Mr. Powell in person?
No, I never have. And you find that a lot, right? The people are either extra tall or really short. It's never what you expect.
Never. All right, let's keep going.
My colleagues and I remain squarely focused on achieving our dual mandate goals.
Dual mandate. Joe, this is gonna go fast.
I think we're giving away some money.
Oh, go ahead, Joe. What'd you say?
I said I think we're gonna give away some prizes today. We're gonna have bingos.
Yeah, we're definitely going to hit bingos. We are going to be hitting blackouts, but you can't win unless you put hashtag outline in the chat. And if you think you might have put it in, but you're not entirely sure, you should do it again, just like my friend Scott did, or my friend Ryan did, and my friend Free Florida. Don't forget. Don't forget. See, Wayne didn't forget. Wayne didn't forget. All right, let's keep going. This is going to be great, Joe. I'm very excited to give away all the prizes.
Of maximum employment and stable prices for the benefit of the American people.
Okay, did I miss anything yet? Stable prices, maximum employment.
Yeah, there's stable prices. O2.
That'll work. For those, if you hear an echo off of Joe, I don't know why. StreamYard changed a setting, and it's really jacking up our settings over here. Echo cancellation. Automatically adjustment. Yeah, I don't know. When I do my screen sharing, it messes up Joe's audio just a smidge. So we're going to do this. We're going to do our best. I hear you, Diff the Outsider. I hear you. We're going to do our best. Bring back Lucy. Okay, so Joe, we're going to get it. We're going to get a whole blackout here. I feel it.
He's muted.
Who's muted? Oh, shit. My bad. Got it.
Will suggest that the outlook for employment and inflation has not changed much since our meeting in September.
Did I miss anything? Let's see. Did I miss anything? No, I don't think so. In the chat, let me know. Hey, chat, let me know if I miss anything, okay?
Market appeared to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today, the Federal Open Market Committee decided to lower our policy interest.
What did you hear?
G1. Inflation's
G1. Inflation's too damn high. All right. Here we go. By the way, the musical chairs of muting is a bit tedious. We're gonna try this, Joe. We're gonna keep it going.
Interest rate by 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1.
Wait. Did SPY already go up 1%? I didn't get the opening price. Hang on. Well, no. Not 1% for the day, but 1% since the start of the meeting. So here's what we're gonna do. We're gonna throw a line on here at this very moment. I know it's cheating a little bit, but we'll give you that right there. 685.44. So 1% up is going to be 692, 1%. And listen, it's gonna happen. It's gonna happen, Joe. 1% down, gonna be down here. All right, so that's our levels that we need to see on SPY. All right, we'll keep going. I'm gonna do my best here. Professional YouTuber on stage here. By the way, hashtag outlier in the chat, but only if you want to win. Only if you want to win. Oh, good point. Good point. Let's switch to the 1 minute chart on SPY. That'll be more fun. That'll be more fun. Let me add in more lines. Let me add in more lines in here real quick. So we'll do red lines here. And we'll do another red line here. All right. So if we go over one of those red lines or under one of those red lines or both, then I'll give it to you. All right, Joe, let's make it happen.
I will have more to say about monetary policy after briefly reviewing economic
Monetary policy. This is not going to work, Joe. I should just do a blackout. This is not going to work.
developments. Available indicators suggest that economic activity has been expanding at a moderate pace.
Let's see. Nope. Okay, keep going.
GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown.
Okay, did I miss anything yet? Mighty Mouse says it's dropping. That's okay. We're just waiting.
Of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline.
All right, have we heard anything yet? Mr. Mangine says B3. I'll give you B3. How are we doing on the charts? Okay, we're still good on the charts. Let's keep going.
In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but...
Oh, you said inflation. I'll give you core inflation. Oh, Joe, this is going to be bigly. I'm going to give away all the prizes today, but only if you put hashtag outlier in the chat. Only if you do that. It's not going to work elsewise. Salty Brad, what's going on?
Remains somewhat elevated relative to our 2% longer run goal.
Oh, I said 2%. Damn it, Joe. I thought I was going to be funny and not have all that many come through and it was going to be a thing, but no, it's going to black out. I'm going to black out here in a minute. I should actually have Guinness in here and not coffee. Yeah. Okay. Let's keep going.
Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well.
Okay, there's your core inflation. Thought I had PCE on here, maybe I didn't. Okay. Oh, we gotta track gold too. We gotta track gold real quick. Hang on, GLD. That's on the board as well. Ooh, Goldman got you already. Let's do 130. Hang on. Opening. Joe, I'm officially unmuting you. Or you muted you. This is a professional YouTube channel, Joe. Let's make it happen.
Hey, I'm unmuted now.
You're good. You're good.
Yeah, look at that drop on gold. Woohoo!
All right. Where's 1% up and down? Let's see. We definitely have hit 1%. Or have we? No. It's close. Hang on. This live bingo is definitely a lot more work for a professional YouTuber. I'm just saying.
That's fun though.
Hellaciously too much work for me. So
You're
I guess it's better than digging ditches.
You're doing a great job, Chris. Keep it up.
Thanks, Joe. You're a sweetheart. All right. Gold has not hit the 1% move yet. SPY, let's go check on SPY real quick. Has not hit the 1% move yet either. Okay, we're good. But as we go through, in fact, let's do SPY and gold on here. How much more crap can I add to the screen, Joe? We got you and me. We got the chat. We got well, I don't 1 minute. There we go. We got gold and SPY. We got bingo, and now we're going to add Mr. Jerome Powell back in. We got everything.
In the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing.
Disinflation. That one came. Here we go. All right. Disinflation. Okay, got that. Are we having fun yet?
This is cool. I've never done this.
Yeah, it's a lot of work. Like it seems like it's easy, but when you're like bouncing around between charts and bingo and listening and looking at the chat, it's quite a lot of work. Yeah. It's good to have ADHD. Let me ask you this, chat. Hey, chat. No cap. Have I missed anything? Have I missed? But no caps. All right. No cap. No skibbity. Okay, let's keep going.
Measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people.
All right. We already got price stability. We already got dual mandate.
At today's meeting, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point.
There you go. Rate cut. Hang on. Let me change this. How about this? Rate cut or hike. There you go. Joe, I just gave you one for free. Hey, like that. Is that worth 82 cents a day that I gave you one for free? Huh? Here we go. Let's put that there. All right. Looking good. Let's keep going.
And 3/4 to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift.
He said short-lived. I don't know if you heard that. It said short-lived. No. Okay. Keep going.
In the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become.
Did I miss I3? Manny's going nuts on I3. What was I3? I3 recession risks? I didn't hear that one, Manny.
An ongoing inflation.
Okay. Let's go look over here real quick. SPY has recovered. Not hit the 180 or the not 180 1% move up or down yet. Oh, gold has not hit the 1% up or down yet. All right, y'all got close, but it didn't happen. Got close, but it didn't happen. Let me zoom in just a smidge. There we go. Okay, let's keep going.
Inflation problem. In the near term, risks to inflation are tilted to the upside, and risks to employment to the downside.
Okay, fine. I'll give you recession risks, Manny. I hear. He's like, I did hear it. I swear. I did hear it. I swear. I'll give you that. Fine.
A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1. Our long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged.
Oh, daggum. Okay, I already gave you rate hike up here. Hang on. Let me. I just realized we're gonna do rate cut on this square. It doesn't change anything. You're still gonna get that bingo. I mean, you're still gonna get that square. You're probably gonna get the bingo too.
That we have reached that standard. In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff.
All right, let's check our percentages over here. We're good on gold, good on SPY. Okay, let's get back.
Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing.
Joe's is so boring. Yeah, Joe has
cool,
something.
it's cool seeing his effect on the markets directly, though, and like a time-by-time cases. This is really neat.
Yeah, it is. I agree. And there's people who trade just this, right? I remember there's one of the market wizards, in one of the 4 books or whatever, who specifically only trades Fed announcements. Now, what's cool about this too is that what you see right now in about 10 minutes could look totally different. I mean, it can be way down, way up, and way back down again, and then way up again. Like it actually can be extremely volatile. Which is why, having these 1% moves on here is not out of the question. Not out of the question. By the way, it looks like we might turn green from our starting point right here in just a moment. Let's keep going. Oh, somebody left a chat here. Justin, SPY has dropped all the way down to numbers we haven't seen since Monday. The market is crashing to what it was 2 days ago. I love that perspective. By the way, Don's over there. Don the rock star, snacking on his Trails In beef jerky from my son Elliot's Boy Scout sales. Thank you, Don. And in addition to that, I came home from vacation and I found 2 boxes of Boy Scout popcorn that I got from Joe's Scout. So how about that? I was excited to pop that open last night.
Awesome. Which one did you get? The kettle?
2 boxes of kettle corn.
Oh, it's good stuff, sir. Good stuff.
Your kids' sales were a better value than our kids' sale, because ours was like 1 bag for $20. Yours was a box for $20. A box of 12 bags. So yeah, that was definitely a better value than ours.
Yeah.
Okay. Oh, Rick is freaking out and selling everything. Good call, Rick. I love the idea. It's definitely going to work out like that. Okay, we'll get back to it.
We will continue to allow agency securities to run off our balance sheet, and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities. This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices.
I want to give you something on that one. Maximum employment and stable prices. I'll give you, but he didn't say strong labor market remains strong. I want to, but you know what he is reading from, Joe? He didn't specifically say it, but he is reading from the FOMC statement. So I'm definitely going to give you that one. Okay, let's keep going.
we remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Oh, snap. We didn't get it bingo. Joe, what kind of horseshit non-professional YouTube channel is this?
I didn't see it coming.
This is
Wow.
unbelievable.
Wow.
Do you think maybe in the questions he might say some of this?
I think he'll definitely say remain vigilant. Yeah, he's got to.
That sounds like something they would say in Gotham City. We must remain vigilant for all of the crime sweeping our city.
That's right.
Justin says, I want my 82 cents back today. We got gypped. I know. But imagine if the guy running the channel might talk ourselves into a couple things. I'm just saying, there's a guy who pushes the buttons and he doesn't have to pay for this stuff. So it works out both ways for everybody. So I don't know. Let's just see what happens over here. You know what, Mr. Mangine? If you don't like it, I'll give you nothing. How's that sound? I'll disqualify you from the bingo giveaway if you put #outlier in the chat. And don't forget, if you haven't put #outlier in the chat, you need to put #outlier in the chat because I don't want you to miss out. Even if you did it already, even if you're 100% sure, just take a couple seconds, type in those 7 little characters real quick. I don't want you to miss out.
Nick Timmeros of the Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So,
hang on, let's see. Let's check over here. All right, we haven't hit 1% either way on SPY or gold.
I would say that needs to be taken on board. We had, just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two...
At a time where we have 6-7? Oh, man, he was totally doing the 6-7 thing.
goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December, and we're going to be looking at the data that we have.
There you go. I'll give you data dependent on that one. I'll give you data dependent right there.
How that affects the outlook and the balance of risks, and I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook, or could this?
Man, I gotta change into for the next Fed bingo meeting because it's too similar. It's too similar. Well, sorry that it's too similar and that you get 2 bingo squares. Oh, what a terrible YouTube channel we run around here.
Unfold along the lines of last year, where you made a sequence of adjustments and then waited to gather more information?
So the way I've been thinking about it is the risks to the 2 goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw the downward revisions in job creation, we saw a very different picture of the labor market, and suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, others people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the 2 goals are sort of equally at risk, then you ought to be at neutral, because one of them's calling for you to hike and one of them's calling for you to cut.
Oh, he said rate hike right there. I'm gonna give you that one. You like that, Joe? A little bit of rate hike right there. Let's see.
If that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
Claire. I'm Claire Jones, Financial Times. Thank you for taking this question. We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investment we're seeing in AI and some of the generation of household wealth through rises in stock prices related to the AI boom? Thank you.
She says stock prices. Let's go check. Nah, we're okay. We're okay. We're up a smidge from our opening point. Okay.
Wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody. I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And, some will be more averse to inflation overruns, and some will be more averse to underruns of employment. And
you don't know what the dot plot is? Don't stress. I got you, Manny. So the dot plot is actually it's a tool they use from the Fed governors to get what their projections are for future meetings. So you'll see it has multiple lines for like December meeting, January meeting, December, whatever, May meeting, whatever. And then they will put on there where they think rates will be at that point. Right. So let me show you what it looks like real quick. Dot plot. Fed dot plot. It looks like this. Right. So here they're saying, okay, in 2025, we think rates will be here. 2026 rates will be here. 27 here or over here. Right. Now, it's really interesting when they vary wildly, right? Let's see. Probably not going to see any of that very wildly, because that would mean some sort of like discontent amongst the Fed governors, right? This one has a decent amount of spread right here, right? So you've got one wild card who said rates were going to be super high, then one wild card that said rates would be super low, and then everybody's kind of in the middle right there. But that's what the dot plot is. It's just the Fed governor's projections of what rates they think they'll be out in the future. Wait, I see what you did there. You made me talk about the dot plot. Damn it. That was a smart move, Manny. Joe's like, just wait for it. I see what you did there. I see what you did there.
He's muted.
This is a professional YouTube channel, Joe. Videos are not allowed to have human error on them, okay? How dare you point out the flaw of this video?
You're doing a great job.
I'm trying.
More participants go out and talk. They're very disparate views, and they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, that we haven't made a decision about December. I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here.
He's definitely not ruling anything out in December, is what it sounds like to me, Joe. Definitely not ruling anything out in December.
Is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the U.S. Treasury issuing more short-term debt?
That could be one.
Hold on, let's check her charts over here. All right, we're definitely not above or below 1% on either of those.
Of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a.
This is a professional YouTube channel who also doesn't know if that's spelled correctly, which is probably where you're getting at with that. So you know what? It's going to be what it is. Stay vigilant. I don't know if that's the correct. Joe, is that the right way to spell it? I have no idea.
I think it's vigilant.
Hang on, I might have to spell it out real quick. How to spell vigilant? Vigilant. VIGI. Oh, shut up. It's not all that far off, except a bunch. VIGILANT. There we go.
It's so close.
What's that?
It's so close.
It was so close that nobody noticed except for who noticed this? Stephen has been excluded from the drawing. I will punish Stephen for his insolence. How dare you, Stephen? Point it out. If Stephen happens to win, he gets nothing. You get nothing, sir. Good day.
I don't want to tell you that he's muted, but he's muted.
Frickin' Joe, this is... I remember the good old days when I didn't have to mute 4 things to watch a video with you, Joe. But now, God, I mute you. Keep it up.
Feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened, some things have been happening for some time now, showing a gradual tightening in money market conditions. Really in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be holding on to get the last few dollars, because again, with the balance sheets, the reserves are going to continue to shrink as non-reserves grow. So, there was support on the committee as we thought about it to go ahead with this and announce effective December 1 that we will be, freezing the size of the balance sheet. And the December 1 date gives...
Freezing the size of the balance. Should I give them pause and rate hikes because he said freezing the size of the balance sheet? Type a 1 in the chat if you feel like I should give you pause and rate hikes for freezing the balance sheet, or type a 2 in the chat if you feel like I should be more vigilant, more vigilant on what they say. More vigilant. Remain vigilant. That's the plan. All right. I have to remain vigilant. You know what? All these ones have been overruled. I have to be vigilant. Sorry. No, I'm just joking. I'm gonna give it to you. Which means, Joe, do you know what we have here? I have to unmute mute the screen. Are you ready for it? Joe, you call it. You ready?
I think we should have an alarm. We're going to do this.
Wait, oh, wait, we don't have it yet. Oh, I psyched you out, Joe. We don't have gold rises or falls by 1% yet. Ooh, I got your hopes up. Oh, wait a minute. Oh, snap. We got what? On row 3? I'm waiting on you, Joe. Professional YouTube channel here. What do we got on row 3?
I think we have a bingo. Woo!
We got our first bingo. Dadgum, I had to pull teeth out of here, Joe. Let's do this thing. Come on now.
It's at the point where I don't know if I'm muted or not. So here we go.
Just assume you're always muted. How's that?
There you go.
Batman would know how to spell vigilant, and Lurkophiliac is also excluded from all from all prices. Wait a minute. Batman 007 does know how to spell it. Okay, let's keep going.
The time to adapt.
Colby.
Thank you, Colby Smith with the New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current employment levels or even starts to strengthen somewhat, how would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second round effects from tariffs?
Yeah, I mean, in principle, if you were to see...
Daniel also excluded from not just this drawing, but all future drawings. How dare you? Wait a minute. Everybody's all over B2. hang on. Did he actually say that? Who said B2? Who said B2?
See data.
Would you then be a bit more concerned about the 2% target? Seems to be, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor market either stabilizes around current
Joe, daggum. Let's do this again, Joe. Are you ready this time? I'm going to mute the screen. You're going to be unmuted, and we're going to do this together. Ready?
Ready, let's do it.
Okay. We plan this out. Professional YouTube channel. We had this all planned out in advance. 3, 2, 1, go.
Bingo! Woo, 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 woo.
That's right. We got another bingo. Finally. Wait a minute. Whoa. We got triple bingos, Joe. Triple. Man, that girl came through clutch.
Would that change your perception of how much interest rates need to fall from here? Would you then be a bit more concerned about underlying inflation and the possibility of second round effects from tariffs?
Yeah, I mean, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing,
Okay. He definitely said at that time, labor market remaining strong, strengthening. All right, what do we got over here? Nothing off. Oh, by the way, we have a new exit signal for Plan ETF today. Joe, did you hear about the new exit signal on Plan ETF?
No, I didn't. Is it to freak out?
No. You said that with such sincerity. Is it to freak out? Oh, that was good, Joe. I like that one. That was really good. No, actually, Scott the man, Scott the quant, Scott the smartest dude that I've seen in a couple days, who is actively watching this live stream, found us a way to improve our expectancy over 5 years by 300% on Plan ETF. Now, let me break this down for you. This is not the expectancy at 300%. This is improving by an additional 300%. Yeah. That's the sound of Joe's. Okay, there we go. Okay. Go ahead, Joe.
I'm excited to see what this is.
Yeah. And I'm going to continue to tease that as we watch some more of this video here. Listen, here's the deal. I'm making you buttloads of money thanks to all the incredible outlier data and plans that we put together. I'm giving away free merch, right? If that doesn't deserve a very gentle tap on the like button, I don't know what does. And Joe, I don't know if you heard, we just hit 40,000 subscribers on the YouTube channel yesterday. I landed in Dallas from vacation, pulled up my phone, checked my YouTube stats right there across the top, exactly 40,000 on the nose. I was like, let's go. We're finally spreading the news about how it's not normal to do what we do. Finally.
Fantastic. Congratulations, everybody. Wow.
I know. This is awesome, right? It is so cool to win with all of you guys and the 4 girls that watch, like Carol. Yeah. So here we go. Let's keep going here.
To our decisions going forward. So, we do have, we get some data. The labor market is a place where we get, for example, we get the state level data on initial claims, which are sending a sort of a signal of more of the same. We also get job openings, and we'll get lots of survey data. We'll get the beige book and things like that. So we'll have a picture of what's going on in the labor market, and the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability.
I appreciate that, the hammer, and I also appreciate that the little avatar with the monkeys and the hammer sitting on top of the Eeyore donkey. I love it. Sylvia says, "I'm a jelly." Wait a minute. What, Sylvia? My wife would not appreciate you tapping my like button. I'm just saying.
To assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah. So we get like I mentioned what we get in the labor area. We get some data in inflation, some data in economic activity. And we'll have a picture of what's going on. We also will have the beige book again. I would say we're not going to be able to have the detailed feel of things. But I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of
Let's see. We have not hit 1% either way just yet.
how it might affect December, it's really hard to say. December's, the meeting's, I guess, 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then, that could be an argument in favor of caution about moving. But we'll have to see how it unfolds.
Steve.
Steve Leisman, CNBC. Mr. Chairman, can you characterize the meeting in terms of, you said strongly differing views?
Were you laughing at that one too, Joe? How dare you, Lurk affiliate? Where's my permanent ban button? Where's my ban button? That was great.
Was this a close call, this cut, or was it a close call maybe the other way because you had dissents on both sides? Thanks.
So I was referring to the discussion about, to the extent it related to December. You saw we had two dissents, one for 50 and one for no cut. So, that was a strong, solid vote in favor of this cut. The strongly differing views were really about the future. What does that look like? And I think people are saying, they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on.
All right, we're gonna drop it off here, Joe. So you can remain unmuted the rest of the time. How's that sound?
Okay, sounds good.
Yeah, I know Joe is like itching. He's like, I'm such a professional YouTuber now. I want to speak. Let's see. Did we make it 1% move up or down? No, I don't think so. So that leaves us with how many bingos not if we got a bingo, but how many bingos did we get?
I think we had soft. Yeah,
deep
landing.
thoughts about the ban people, by the way. Yeah, get ready. Okay. Keep going. I'm sorry, Joe. I interrupted you. What'd you say?
I think we caught soft landing. I had earmarked a comment that I agreed with there. There we go. Right here.
All right. Type a 1 in the chat if you agree that we need to add in soft landing. Type a 2 in the chat if we actually didn't hear it. But a type of 1 in the chat will definitely get more people winning bingo. By the way, let's pull up what you might win over on the Wheel of Fortune from Bingo. You might win our new OVTLYR slingshot shirts or hats or mugs. You might win one of these awesome items over here. Lots of slingshot stuff. We've got sit and cash and don't F up stuff, 80 Delta stuff. We've got, let's see, OVTLYR flag shirts, 10, 20, 50s. We got all kinds of amazing things to win over here. Oh, man, Joe, I feel like we're going to be flooded with ones. All right, fine. How many is that? So if we're going to give you soft landing, good gravy. That's 1, 2, 3, 4 bingos. Let me know. Did I miscount the number of bingos? 1, 2, 3, 4. No diagonals. Either way. No other vertical ones. All right. Hey, was this cool? Did you like this? Type a 3 in the chat if you want to do Fed meeting bingo from now on, or type a 4 in the chat where you're like, meh, I'm not into it. But in the meantime, I got to give away 4 bingos, Joe. 4 stinking bingos. You have about 5 more seconds to type hashtag OVTLYR in the chat if you want us to, or if you want to be considered to win. I see lots of 3s. Joe, I see like all 3s. I don't see a single 4. Everybody wants to do this from now on.
I thought it was really cool. I mean, usually at the end of the day, when all this has already transpired, you see these massive candles. In this instance, we got to see what the man was saying, the cause of candles. It was really cool.
Yeah. And honestly, it's a super tame results right there. I mean, a little bit up, a little bit down, but we ended really close to where we started the meetings from. So not a whole lot changed. But you know what is going to change? I'm going to change someone's life by giving them some free stuff. How's that sound? Sound good?
Yeah.
Let's see who's going to be the first winner of the day. I hope they're vigilant. I hope this person is vigilant. Let's see. KS Bet. Congratulations, KS Bet. I wonder what KS Bet is going to win. Let me copy this. Let me crank up an email to send over to April. She will handle this. And to claim your prize, all you got to do is just email over to April, support@outlier.com, and she will send you those prizes. Let's see. Oh, wait, I got to pull out the Wheel of Fortune here real quick. Wheel of Fortune. I got 2 Wheels of Fortune. Merch Wheel of Fortune. There we go. All right, let's see what KS Bet has won. KS Bet has won an Outlier Ucuzzi. I have one of those. Joe, do you have one of those?
I do. I should have been prepared and had it to show you, which I don't, but I'll fix that.
Joe, this is a professional YouTube channel, okay? I think you probably picked that up by now, that we don't tolerate mediocrity around here, okay? There is no way that we can, that we can do human error or anything like that. This must be executed flawlessly because we do not edit. We do not edit. How about we let's see who the next winner is. Congratulations, KS Bet. Let's see who the next winner is. Let's see. It's going to be Frank R. Congratulations, Frank. Let me send this over to April. Let's see what Frank R has won. See what Frank R has won. Let's see what the next winner will be. It was, who was that winner? It was Frank R. Frank has won. What the frick? Hang on. Frank has won a song, apparently. How this changed? Let me try that again, Frank. Sorry. Professional YouTube channel at work once again.
Congratulations, Frank.
You won a song. Actually, Frank won a Monkey Hammer coffee mug. There we go. Nice. Monkey Hammer coffee mug. Outstanding work, Frank. Way to go. I bet when you were waking up this morning, Frank, drinking out of your lame ass mug that you had over there, Frank, no offense, but it wasn't a Monkey Hammer Outlier coffee mug. But now it's going to be one awesome coffee mug, Frank. All right, let's go to number 3 of 4. Let's see. Frank says he's vigilant, not interested in the song. Yeah, I don't blame you. Uncle Bluto, wait a minute. Wasn't he one of the people that I had to permanently ban? No, he wasn't. In fact, Uncle Bluto, he's the one who makes the sit and cash and don't F up light up signs. So Uncle Bluto is our winner. Let's see what Uncle Bluto has won this time. Oh yeah, Lurkophiliac. He's one of our perma bans. That's right. A Monkey Hammer hoodie. Ooh, a grand prize. Outstanding. Monkey Hammer. Just when it's starting to get cold too. Monkey Hammer hoodie. Yeah, the hoodie is the most expensive thing we give away. Very cool. Congratulations on that. Big grand prize right there for Uncle Bluto. Let's see what the next one is. Last one, best one. Let's see. Chris in Wisconsin. How dare you? How dare you, Chris in Wisconsin? How dare you be such a badass to win, Chris in Wisconsin? How's that sound? Let's take a look over here and spin the wheel to see what Chris in Wisconsin has won. He could definitely use a hoodie. It's cold up in there. Pluto. Sit and cash and don't F up the coffee mug. Wait. Daniel Longsworth. If Chris hadn't made me sell my SoFi shares, I could afford the Outlier hoodie. Oh, sorry, Chris. You unfortunately only won a sit and cash and don't F up coffee mug. So congratulations to you. Sit and cash and don't F up coffee mug. All right, so let me send this email real quick. This was Wednesday. Bingo winners. Okay. April will take care of that. Again, to claim your prizes, just email us in at support@outlier.com. Hey, Joe, how about we go trade? Sound good?
Yeah, let's see here. We've been looking at charts. Let's see if we can make some trades.
All right, let me pull this over here and let's see what happened. I have no idea what happened in the last little bit. Looks like Qs are still up on the day. Oh, hang on. Let me go back to one screen. Qs are still up on the day. Not a whole lot, but 24 basis points. and it's just under our new exit point. So let's talk about our new exit point. I'm very excited about this new exit point. We still might take it at 636.17 is where we'd go out. It's at 634.44, 47. It's running back and forth right now. There is a chance, a possibility. Good gravy. There's oh my gosh, Joe. You would think that a professional YouTube channel would have all of his charts ready to roll at all times, but no, of course not. I want to see the 5-minute chart here. Okay. There is a high possibility that we're going to take this exit signal today, but we got to see. Now, why are we changing the plan in the middle of the trade? Well, the reason being is that Scott, the amazing quant that we have, actually posted in the Discord. I thought I had it up. Let me go in the Discord real quick. Some really incredible notes. So I landed yesterday. Once I checked and saw I had 40,000 subscribers, which thank you so much for subscribing. I also had some messages from Scott, and he was talking about how if we hit a certain level above the value zone, that there's a higher likelihood of pullbacks. And then he sent me some more data. Let me see if I can find it real quick. Hold tight. Actually, Scott has put way more data in here than he sent me earlier. So definitely keep track of this. But what he sent me was this right here. And I was like, Scott, please explain this to me for my itty bitty baby brain because I don't understand it. And he was like, listen, after so many days after it's left the value zone, actually has a lower average percent move. See, it was 3%, 5%, 3%, 5%, 3%, 3%, 4%, 6%. So that was the first thing he sent to me. So we chatted a little bit, and then he sent me this. So the current plan ETF, it's not this one. The current plan ETF is this 854% gain in 5 years, which is amazing. Huge returns. And so he said, Chris, look, if we use the 3 ATR as a sell into strength point, it increases our percentage gains by 300%. It's not 300% total gains. It's an increase of 300%. Can you believe that?
Wow,
Joe, seriously, can you believe that?
That's amazing. Wow. Holy cow. Good job, Scott.
I know. Great job, Scott. So I was like, immediately, we need to add this into our plan. So what does that look like? So the value zone is the area between 2 ATRs and the 20 EMA. And we want to enter when it's in the value zone, like we did here on October 20th. And then once it pops out, we need a fun name for that, right? If this is the value zone, this is the something else zone. Put it in the chat. Maybe we'll get up with something. Come up with something real quick. Once it closes, this is the key points here. Close on the index, not on the ETF. So not on TQQQ, but a close on the index above 3 ATRs above the 20 EMA. So basically, we're just adding an additional ATR to it, to the value zone. If we get a close above that point, taking that as the exit signal. The danger zone, I like that. The money zone, I like that too. The rollout point. These are some great names. The Badland, the profit zone. Profit zone's a good one. I like that. The Bigley zone, the RAF zone. Ooh, RAF zone. He kind of deserves a RAF zone. The price is paying zone, the moon zone, the donkey popper. I don't know. These are all fun games. I like these. Or not games, fun names. Fun names and games. So we're going to let that run for a couple minutes. We're going to go through our regular plan for today.
Well, how did you add that to your chart, Chris?
Well, Joe, it's a great question. So I am a very bougie person, like my wife. And I do not have the free plan in TradingView. I actually have the paid plan. And in the paid plan, I can add more than 2 indicators. So this indicator is called Keltner channels. Now, this is no different. I'm telling you, this is exactly what the value zone is. The value zone highlights it for you because it's just designed to make it easy to see. But it's just a Keltner channel with a level of 2. All I did was add in a Keltner channel with a level of 3, and that shows me where the cash ceiling monkey zone, Motus zone, the brisket spot, the profit zone is at. the quant zone. Exactly. So that's all it is. It's called Keltner channels. If you want to look at my inputs here, the length is 20. That's the EMA. The multiplier is 3. If I put it at 2, watch this. It'll be exactly where that one is. That's all. That's it. So we're just making it from 2 to 3. And then the ATR length is 14. That's just the default. So, like I say, we're really close to there. It could totally happen. Give it a few minutes and we'll see. In the meantime, let's run this as if we were a professional YouTube channel that has a professional slide deck on deck. How's that sound? Joe, you ready to do this?
Yep. Here we go.
Welcome to the invitation-only live stream for the OVTLYR Trading Room. This is where we help you save time, make money, and start winning with less risk. So go ahead and subscribe if you're watching the replay, if you haven't done so already. Now, on the plans, we're going to go through M, A, ETF, and sit in cash. Sit in cash and don't F up your portfolio. Now, here's the crazy thing, right? If you want normal returns, this is not for you. Change the channel. All right, get out of here. But if you want outlier returns, you're in the right place. So when to use each of these plans? These two are our most offensive, aggressive plans. These two are our most defensive, conservative plans. We're in plan ETF right now. And let's take a look if we need to get out of it, right? Because if we need to get out of it, right, we're following the plan of reducing risk before adding new trades. And then we need to review our exit signals for our active plan. So our active plan is this, plan ETF. Now, you'll notice this looks like hot monkey garbage because I am no designer. I just moved some things around and added our new exit signal. If the QQQ close price is greater than 3 ATRs above the 20 EMA, that is a close signal. Do we have that right now? No. So don't get ahead of yourselves. Don't try and jump out. If you don't have your signal to exit, don't do anything. Okay. This is a new signal to exit. Now, there is no trust me bro around here. So the plan ETF backtesting data before showed an 854% cumulative return over 5 years. This one change, the only thing that changed was this exit signal, adding in a close over the 3 ATRs, went from 854% to 1,140%. Unbelievably higher. Joe, this is crazy talk. So, oh wait, you can't see that. This is just crazy talk. Just one change to the exit plan increased it by 300 percentage points. Crazy. So I'm definitely going to use it. I'm going to use it starting right away. We don't have a sell signal. The 10 and 20 is still bullish, and there are no order blocks above QQQs because this is the all-time highs right here. So it doesn't look like we need to exit the plan. But if we did exit the plan, this would be up about $10,000 in this account that we're trading here right now. How much would that be? How many years of OVTLYR do you think that would be? 10,000. 383 divided by $299 is 34 and a half years. Let's round it up. 33 and a half decades of OVTLYR in one single trade. 3.5 decades of OVTLYR in one single trade. I feel like OVTLYR is definitely worth the 82 cents a day, but you tell me in the chat. 1.1 million years. So we don't have any plans to exit on a plan ETF, but if we did, let's take a look to see if we would get in plan M. So what's the market telling us? The SPY is in a bullish trend. The SPY has a buy signal. And let's go take a look at that, right? Don't just take my word for it. Let's actually pop into OVTLYR and take a look at these things. Close some tabs. By the way, I did update the not Word doc, but the PowerPoint, the slides that are in our Discord. If you want access to that, it's in our Discord. And let me close a couple tabs here. All right, so we have a buy signal on the SPY, buy signal on Qs. Let's go into the SPY. Mr. Dave says he's up only 23 years of OVTLYR in his portfolio thanks to plan ETF. That's a new metric. Never mind percentages. I like that. In fact, I want to do that because that's a great sales tactic. Because my goal as chief marketing officer is to make sure as many people know about OVTLYR as possible. And if you just pay for 23 years of OVTLYR, I feel like that was a good trade. I feel like that was a great trade. We're looking at the SPY. It's definitely well worth 82 cents. Thank you very much. In a bullish trend with a buy signal. So bullish trend, buy signal, and the fear and greed heat map is actually there as well, right? It's under 70. It's at 63.44 and rising. So that's good. That's what we want to see. Now let's go to the full stocks breadth. Let me pop over to breadth real quick. And let's zoom over. And what we see here is we have a bullish cross on market breadth, and it is continuing to grow. What that means is more buy signals than sell signals. And looking over here, dude, most of the sectors are looking really strong too. Most of the sectors looking, other than utilities, all of them have bullish crosses. Now, we don't have this feature just yet. This is going to be built in a future outlier upgrade. We have maxed out capacity on our servers. I told you guys we were going to add 6,000 new stocks before the end of the month, and we did, and it broke our servers. So we're having to install some new servers, and in the meantime, y'all just be chill. We're working on it, okay? That's what happens when you're like tripling the size of your data set. Mahesh said with all the data, it was more than triple. Like he said it was like an exponential growth. But yeah, it is what it is. And 3, 2, 1. Here we go. Okay, so this should be built into Outlier pretty soon. Never mind this. We're not going to get to the stocks, so we're just going to look at the sectors here. So let's go over here to the sectors in Plan M. Sector Fear and Greed heat maps. So the SPY heat map is at 63.44 and rising. We talked about that. There's only one sector that's greater than 63 on the sector heat maps. That's utilities. Now, our rule is we want it to be under 70 and rising. Where's that at? Under 70 and rising. So that one is excluded because of that. Even though it's moving up, under 70 and rising. That would be the only one with relative greed, where the SPY has less relative greed than the individual sector. And then outlier channels, we don't have anything that has positive outlier channels, meaning more uptrends, less downtrends. So all of this to say, I don't see any entry signals for Plan M or Plan A today, Joe. We're not there on either one of those. And if we look over one last time on QQQ, we are not there for that exit signal, the new exit signal today. But you know what? Very possible that it could show up tomorrow, right? We can't anticipate the future. All we can do is trade a plan that we have made ahead of time, a back-tested plan, a data-driven plan. And then once we get those exit signals, that is when we go. That is when we go. Let me see. Will I be modifying the trading view indicator? Yes. Now, funny story is that this is the first indicator I've ever made ever, the value zone. And funny enough, it was great for a minute, and then TradingView decided that it broke whatever guidelines that it broke, and now you can't get it. So it's going to happen. I've enlisted Deep Thought to help fix whatever I couldn't tell you what I have no idea what I broke. ChatGPT wrote it. I'll blame ChatGPT. So yeah, we're gonna get that updated. We'll have that extra line added on top, so you'll know where the top is, where the RAF zone is, the profit zone, the GRAF spot, the G. Okay. Yeah, I don't want to go there. The RAF wall, the heaven level. We'll come up with something fun. I like it. The burger bun zone. That's not a bad reference right there. That's actually a really good reference. But in the meantime, be sure you come up with a plan and then trade that plan. Joe, we could totally freak out and sell everything, or we could be scared that, it's gotten too high and sell everything. But does that help us in any way?
No, it doesn't. It just makes your life an emotional roller coaster, doesn't it? Like, we could have sold a few days ago, right? But look at all the gains we would have missed just by following the plan. You have all these extra monies in your account.
Dude, I got to tell you, a big thank you, Joe, because I asked Joe to be my wingman while I was out on vacation. And had I not trusted in Joe to be my wingman, I would have missed out on hella gains. But thanks to Joe and having that plan, I was able to trade this from Disney World. The happiest place on earth.
Who makes money while they're on vacation, Chris? Who does this? Outliers do this.
It's not normal. No, it's certainly not normal. It's not normal at all to make more money than your vacation cost by like multiple times. It's not normal at all.
No.
That's what we do around here. That's what we do. So listen, Joe, if somebody were looking to save time, make money, and start winning with less risk, what do you think they should do?
Subscribe to Outlier first, and then you're going to want to learn more about Outlier. And the way you do that is clicking on one of these videos right here.
These videos.